In our last video, we talked about the Income Tax Transfer Pricing Regulation 2018 and how it helps to prevent companies from dodging taxes by playing around with prices. We were able to discuss two of the components of the regulation, which are maintaining contemporaneous transfer pricing documentation and using acceptable transfer pricing methods. In this video, we will be discussing the remaining two components, which are submitting country-by-country reports and complying with advanced pricing agreements where applicable. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos. Submitting country-by-country reporting. The Income Tax Country-by-Country Reporting Regulations 2018 were put in place to establish rules for sharing country-by-country reports automatically. This is in accordance with the Multilateral Competent Authority Agreement signed by Nigeria in January 2016 and ratified by the Federal Executive Council in August 2016. Filing obligation and notification obligation under the country-by-country regulations are Nigerian headquarter multinational enterprises and their local subsidiaries with consolidated group revenue of 160 billion in the preceding accounting year who have an obligation to prepare and file CbCR with the FIRS annually. This is to be done not later than 12 months after the group accounting year end, with effect from the accounting year beginning on or after 1st January 2018. Nigerian subsidiaries of foreign multinational enterprises with consolidated revenue of 160 billion naira in the preceding accounting year are required to notify the Federal Inland Revenue Service of the identity and tax residence of the entity making the country-by-country reporting disclosure on behalf of the group. This notification is expected to be filed not later than the last day of the group's accounting year. Filing and notification exemption include the provision of the regulation do not apply to groups that operate solely in Nigeria. The regulation exempts multinational enterprise groups that have consolidated group revenue less than 160 billion naira in the immediate preceding accounting year from submitting and notifying the FIRS. Ultimate parent entity will not be required to file a country-by-country reporting with the Federal Inland Revenue Service if the multinational enterprise group has elected a constituent entity to act as a surrogate parent entity to file the country-by-country reporting with the FIRS. Country-by-country reporting is a key component of the Base Erosion and Profit Shifting (BEPS) project led by the OECD. CbC reporting is designed to enhance transparency in the transfer pricing practices of multinational enterprises by requiring them to provide detailed information about their global operation, including revenues, profits, taxes paid, and other relevant data. CbC report is a comprehensive document that provides tax authorities with valuable insight into the global operations and transfer pricing practices of multinational enterprises. The key information included in a CbC report typically covers the following areas: revenue and profit information, details of revenues, profits, and taxes paid in each jurisdiction where the multinational enterprise operates are essential for understanding the allocation of income and taxes across different countries. Ownership structure. Information about the legal and ownership structure of the multinational enterprise, including details of related party transactions and intergroup financing arrangements, helps tax authorities assess the transfer pricing risk. Country-specific data. Specific details about operations, assets, employees, and activities conducted in each jurisdiction enable tax authorities to evaluate the economic substance of the multinational enterprise presence in different countries. Tax jurisdictions. Identification of tax jurisdiction where the multinational enterprise is resident for tax purposes and where it has significant economic presence ensure that tax authorities have a complete overview of the enterprise global footprint. Principal business activities. Description of the multinational enterprise principal business activities, including information on key markets, products, and services, provide context for assessing transfer pricing practices and value creation. Now, let's consider some case study. Case 1. Company A retail giant with operations in several countries, meets the revenue threshold of 160 billion for submitting CbCR reports. To meet compliance standards, Company A compiles a thorough CbC report detailing global revenue, profits, taxes paid, ownership structure, and country-specific data. This comprehensive report showcases Company A's transparency in its transfer pricing practices and dedication to regulatory compliance. Case study 2. Company B, a technology firm with a complex global footprint, is required to submit a CbC report to FIRS due to its significant presence and revenue generation in the country. In its CbC report, Company B includes detailed information on its ownership structure, country-specific data, tax jurisdictions, and principal business activities. By disclosing this information, Company B assists tax authorities in assessing the appropriateness of its transfer pricing strategy and ensures transparency in its tax compliance efforts. These case studies illustrate that by providing detailed information on their global operations and transfer pricing practices, companies can enhance transparency, facilitate tax administration, and demonstrate compliance with regulatory requirements. Now to the final component of the income transfer pricing regulation, which is complying with advanced pricing agreements. Advanced pricing agreements are agreements between taxpayers and tax authorities, such as the Federal Inland Revenue Service in Nigeria, that establish agreed upon transfer pricing methodologies for cross-border transactions over a specified period. The key benefits of advanced pricing agreements in transfer pricing include 1. Certainty and predictability. APAs provide taxpayers with certainty regarding the transfer pricing agreements for their cross-border transactions, reducing the risk of disputes with tax authorities and potential double taxation. 2. Timing and cost savings. By proactively negotiating and agreeing on transfer pricing methodologies through advanced pricing agreements, taxpayers can avoid a time-consuming and costly process of transfer pricing audits and disputes. 3. Compliance and transparency. Advanced pricing agreement promotes compliance with transfer pricing regulation by ensuring that taxpayers adhere to agreed upon methodologies and documentation requirements, enhancing transparency in tax reporting. 4. Risk mitigation. Advanced pricing agreements help mitigate the risks of transfer pricing adjustments and penalties by establishing clear guidelines for determining arm's-length prices and minimizing potential disputes with tax authorities. When negotiating advanced pricing agreement with the FIRS, the following steps are to be taken. Pre-filing consultation. Taxpayers interested in entering into advanced pricing agreements with the FIRS can engage in pre-filing consultation to discuss the feasibilities and scope of the advanced pricing agreements, assess the transfer pricing risk, and understand the documentation requirements. Formal advanced pricing agreement request. Taxpayers submit a formal advanced pricing agreement request to the Federal Inland Revenue Service outlining the proposed cover transactions, transfer pricing methodologies, and other relevant details for consideration. 3. Negotiation phase. The FIRS and the taxpayer engage in negotiations to reach an agreement on the transfer pricing methodologies, critical assumptions, and terms of the APA. The negotiation phase may involve discussion on comparability analysis, financial data, and other supporting documentation. Execution of the advanced pricing agreement. Once the terms of the advanced pricing agreements are finalized and agreed upon by both parties, a formal agreement is executed, specifying the agreed transfer pricing methodologies, compliance requirements, and reporting obligation for the covered transactions. Monitoring and compliance. Throughout the term of the advanced pricing agreement, taxpayers are required to comply with the agreed transfer pricing methodologies, maintain appropriate documentation, and submit periodic reports to the Federal Inland Revenue Service to ensure continued compliance with the terms of the advanced pricing agreement. Let's explore different ways advanced pricing agreements provide certainty to taxpayers regarding transfer pricing arrangements. Prevent disputes. By proactively agreeing on transfer pricing methodologies with the tax authorities, taxpayers can avoid potential disputes and uncertainties relating to the arm's length pricing of their cross-border transactions. Binding agreements. Advanced pricing agreements establish a binding agreement between taxpayers and tax authorities, providing a clear framework for determining transfer prices and reducing the risk of adjustments or challenges by the tax authorities. Predictability. Taxpayers can plan their business operations with greater predictability and stability, knowing that the transfer pricing arrangements established in the advanced pricing agreements are compliant with tax regulations and acceptable to the tax authorities. Compliance assurance. Advanced pricing agreements ensure that taxpayers comply with transfer pricing regulations and documentation requirements, reducing the risk of penalties, audits, and disputes with tax authorities. Let's consider some case studies. Case 1. Company X, a multinational manufacturer with operation in Nigeria, entered into an advanced pricing agreement with the Federal Inland Revenue Service to establish transfer pricing methodology for its intercompany transactions. By proactively engaging in advanced pricing agreement negotiation, Company X gains certainty regarding the determination of arm's length prices, reducing the risk of transfer pricing disputes, and saves time and resources that would have been spent on potential audits or adjustments by Federal Inland Revenue Service. Case study 2. Company Y, a multinational service provider that frequently engages in cross-border transactions, secures an advanced pricing agreement with the Federal Inland Revenue Service to clarify the transfer pricing arrangement for its services. Through the advanced pricing agreement, Company Y gains assurance that its transfer pricing practices align with regulatory compliance requirements, mitigate the risks of double taxation, and enhances transparency in its tax compliance efforts. The advanced pricing agreement provides Company Y with the necessary certainty and predictability to conduct its business operations with confidence. In conclusion, advanced pricing agreements play a crucial role in providing certainty, predictability, and compliance assurance to taxpayers regarding their transfer pricing arrangements. The components include maintaining contemporaneous transfer pricing documentation, using acceptable transfer pricing methods, submitting country-by-country reports, and complying with advanced pricing agreements where applicable. By proactively negotiating and agreeing upon transfer pricing methodology with tax authorities, taxpayers can minimize risks, enhance transparency, and promote tax compliance, ultimately fostering a stable and cooperative relationship with the tax authorities. Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.